we're right nuzzled into that resistance. So usually news and technicals, they almost always align. You'll see that a lot in trading where it's like you have like a technical setup or like some type of resistance and then news pops in and you're like, huh, how does that work, right? And that's what we're getting kind of today with the retail sales numbers. We're like nudged right against that 200 SMA, and now we got these numbers come out, so we're getting a little bit of a flush into the market. A small news and technical. Small dip so far, but it could turn into something bigger. We don't necessarily know yet. And if we're looking at like an hourly chart, you can see we're still in really like a nice uptrend over here. And so a little bit of dip at the open really kind of just takes us back down to some levels of support. But if we start to really, if we start to really crack like some different levels, then we'll have to get a little bit more defensive. But we don't know anything just yet about how the market's going to react to this gap down. We haven't had like a decent sized gap down for a while, so it's actually good. The market may go red to green and push back, or it may settle down and start to trend down. We don't necessarily know. What usually happens in a scenario like this, you got to wait out the first maybe 10 minutes and watch the market, see which way it wants to swing. If it ORBs to the downside, then you'll know you'll have some sell side pressure. If you start to come back and fill the gap and it rolls over at the 9 EMA, you'll get the sell pressure. But if it gaps down and pushes over the 9, then what you'll have is a reversal in the market, and then you'll start to kind of push it the other way. So when you think about trading, you want to think about what are the different scenarios that could happen with the general market, We don't know. We're not Svengalis here. What we'll have to do is play the action and see how it plays out after the first 5, 10, 15 minutes and then go. On the good side, regardless of what the market does today, there are a lot of different earnings plays that are popping around. You're starting to see really last few days, There's been all sorts of heat in different types of stocks. Small cap market's been pretty strong. You're starting to see, some of the names like in that solo. Anybody play this bad boy? I know these degenerates are playing in the chat room yesterday. Some of these guys are hitting in the 1/8, but you've got another push on this thing. I'd actually keep this thing on watch. You have probably room up to the 7s if it can go. It is still gapping up like 20%. It is fading off a little bit pre-market, which you'd actually want to see. You don't want this thing to get too stretched. But I'd start watching this thing, see how it starts to hold around support. The float on this is pretty low. You may get an additional movement into this thing. I think when you look at the small cap stocks, the ones that really, really have the heat, and you'll always know, We talked about this a lot in the pre-market. The ones that have the huge heat is the ones that do 30, 40, 50, 60 million shares in volume. That's when you get the heat, The best ones of these, they're running 30, 40 million shares in volume. So you're getting that really, really big push. I mean, you're seeing if you're doing 1 million shares in 5-minute candles, that's something that can push, and you got really a nice trender out of it. So keep an eye on that one for day 2, especially if you get a big dip at the open. Watch to see how that thing starts to rebound and look for, different patterns. But be careful, I mean, sometimes these things spike up and then they fade off the next day. You never know, Use your stop losses and just go with it. Trade what you see. This Yeti's coming out of range over here. You got a nice IPO stock. It kind of reminds me of that AVLR yesterday. Remember, we had the AVLR on the list. When you get an IPO stock and it gaps up on news, because it's a thinner issue, because it's a new issue, what typically will happen is it's not covered as widely. Your float will tend to be lower. You don't have necessarily as many traders in it, and you can get some really nice shredding action on these things. Keep an eye on that that 2144 mark. I'm going to just pretend this candle doesn't exist. I do that sometimes in technical analysis. Just erase this candle, and what you'll see is a beautiful flat top breakout that's on a IPO. I think this one could have some juice. This one is a stock that I would even take at the open on a pattern like an ORB. Watch it on short-term time frames. This cyber is going to be, this cyber is really, really cooking. So you're breaking out to all-time highs, I believe, here. Yeah, you are. So this was issued in 2014. You're busting out the all-time highs. $100 mark is always like a key psychological level. Typically, when stocks bust through 100, they start a next leg higher too. So make sure it kind of holds above that level and starts to build its pattern. I think this one should have some legs. At $100 stock at 2.4 billion market cap, you're probably looking at, you know, not a crazy flow, maybe 100 million on this thing, depending on how many insiders own it and stuff like that. I think you'll have a little bit. I think you'll have a little juice on this bad boy, though. Let it set up. This one does trade a little bit thin. You know, I've watched this stock on and off for years. There typically is a spread in it, 20, 30 cents at times. So make sure if you trade it, like say you see an ORB pattern, don't chase it right at the high. Like level into it a little bit before it breaks, right? So like hypothetically, say this was the pattern and the market was open. When you have something that's got a spread, like you don't want to buy it right at the highs, even if that's the breakout spot, because the spread, the difference between the bid and ask on the spread, if you get stuck and the breakout doesn't work and you got to sell it on the bid, you're going to lose, you know, an extra few $100s. So what you want to do is if you have a pattern intraday and it's got a spread, what you want to be doing is kind of loading on the dips, like scaling in. Say you wanted to add 500 shares for the breakout here. What you would do is, right, you add a couple hundred shares, right, and add another 100 shares, and then maybe you add 200 shares on the break as it's starting to break, and level into that thing. That way, you know, you're not kind of chasing it up on the ask, and, you know, that'll work good with any type of stock with the spread. This IVC looks hot today. You've got a base breakout pattern on your daily chart. You've got a really kind of a multi-month long base. This is the right sector. Usually when you get good moves in, you can get good moves in this sector. You got $2 gap up already. I think this one's going to have a little bit of heat. This RBZ is today's turd bomb. You know, after yesterday, usually when you get a big runner like a solo, you know, you'll find there'll be a secondary stock that gets pushed at some point just to have a little bit of fun, right? Nobody wants to have just one day of stock pumping, right? They like to do day two. So if you're so inclined, you could totally play this thing. Just make sure you stop losses and stuff like that. I won't be playing this in general. I'm too old, too bald, too fat, too hairy. But I'll watch some of the young guys play this and applaud away because it does look like you'll have a chance on it. Only 7 million share float. Watch at the open. If you start to see 1 million share candles, that'll be your sign, right? You start to see 1 million share candles start to pop in, that's when you know that you're going to have some heat on this thing. Then you got to just let that pattern set up. The one thing to remember too is they don't always go at the open, right? Like the solo was a little bit tricky at the open yesterday. Like it gave a couple false looks and then it started to go. So, right? Let it develop and let the trend set, and then you're going to be able to kind of come in. Like you can see, like you know, when it ORB'd, you know, it ran 30 cents and then it just died, right? And it ended up kind of holding at support. And so once you let that trend set, that's when you're going to have, you know, much easier play. There's maybe not too fat, but you know what I mean. You know what I mean. For an Indian man, I'm like a Greek god, but for a white boy, I would be just like a normal person. Six Flags, man. I love Six Flags. I don't know if I can short this thing. I love roller coasters. Obviously, Cedar Point in the Midwest is the best place, but Six Flags is nice. So this one is actually gapping down, breaking below this trend line here. I think you're going to have some heat on this. You've got about $10 worth of range already. Gap down shorts haven't been working as well as the gap up plays, but you do have a setup here. Just make sure that you got like a really, really crispy entry. A lot of these gap up, gap down shorts, after like the first 30 minutes, they've been squeezing to the upside. When they have SSR, I've noticed this the last couple weeks. They haven't been working as clean as they did last quarter. Fossil, same type of deal, breaking down this trend line. This one is a retail stock, though, so you never really get as good of action. I do like this end tap. This is in the tech sector. You're breaking down 2 levels over here. You even got kind of like a pre-market bear flag. Watch those pre-market lows. Like if you break below and then show an ORB at the morning, at the open, then that's going to be your signal that it's ready. You know, when you think about like an ORB pattern or even a quick pullback pattern, you really need it to kind of dust under the pre-market lows. A lot of times, like if you did an ORB, but you're above the pre-market like support, you end up getting a bounce and it goes back the other way. They end up kind of trapping you. I personally don't use pre-market data on my chart, so I got to kind of remember where the levels are or just draw one because I like to see the gaps when I trade. So just kind of be mindful of all that stuff. There's enough action today to, you know, stay away. If the market's getting dusted, you know, make sure if you're trading a non-PR stock, like a non-earning stock, like say you got a Roku or an SQ on your list, those type of stocks have to be timed with the general market. Earnings plays don't. So if you have any gapper play, then you don't have to sit there and watch the general market. But if you're going to trade SQ, you know, Google, Apple, Netflix, any of that kind of stuff, then what you're going to have to do is watch the cues and make sure that you're timing your entries on those stocks with what you're seeing on the QQQ and the SPY. That way you're not getting yourself into a trouble where you're longing some stock based on XYZ pattern and then the market gets the rug pull and it takes off. So just hopefully stay safe today. We'll see how the market reacts to this. If you guys are liking these YouTubes, as always, you know, make sure to give me a little thumbs up and, you know, tell your friends about me. Let's go have a little bit of fun today. I'll be in the boom boom room doing what I do. Peace!